bullish behaviors represent those blue ones. Red represents bearish. By bullish we mean buyers. By bearish we mean sellers. That's a very important concept we need to understand. Let me activate my time frames. Okay, so I now have my time frames here. This is for 1 minute. It means every activity here has to do with a minute. That's the bearish and the bullish activities, buyers and sellers. Then each candle here represents 1 minute. This is 5 minutes. Each candle here represents 5 minutes. This is 15 minutes. Each candle represents 15 minutes up to 1 month. So if you have any question here, you can ask directly from the chat, or you can still go to the comment section. Okay, the next thing we are going to do now, some of things I think we made mention of line and bar chart, demand and supplies. Okay, good. Having talked a little about let's talk more on candlestick. We have what we call candlestick patterns. I will just introduce it, then try to create another content on candlestick pattern, because it is a very broad topic in which every good trader is supposed to understand very, very well. Look at this now. I picked Euro USD pair. What do you mean by Euro USD? We mean Euro against United States dollar. Okay. The important patterns we need to talk about, just permit me to get some of the important tools activated, because I cannot see them. Okay, my standard bar chart is out now. Let me get my line chart. Good. Now look at this candlestick here. This candlestick is called bullish engulfing. Is an activity. If you check the opening, this is the opening. This one has no tail at all. This is the opening. Immediately it opens, it moved up, and it dwarfed the whole of the other candles. Look at how many candles it from here. 1, 2, 3, 4, 5, 6, which is up to 6 days activity. When this one formed, it dwarfed all of them. So this is a bullish activity. Now at this bottom here, the candle opened here, went down, but the sellers it went down, the buyers pushed it up again. It moved up, the sellers pushed it a little, but it closed as a bullish candle. It opened here again and went down very, very well here. Immediately it got here, the buyer said no, they pushed it up again, but it also closed as bearish, but a weak bearish until we now see this engulfing. This one engulfed everything. I want to activate my volume because volume helps to determine whether the activities are okay. Okay, if you can see the volume here now. Okay, this is the first one. The volume was weak. Okay, until we now have a better volume here. So this is where somebody was supposed to have entered a trade. So it now brings us to what we call the concept of supply and the demand. If you want to trade forex, you must ensure that you understand the market structure. The market structure goes with demand and the supply. What do you mean by demand and supply? There are obstacles. When a market is moving up, it will now meet a kind of obstacle that may not allow it to continue going. It is known as resistance. If the sellers are in control and pushing it down, that area where it made a turnaround is where we called support. Let us analyze it practically. Okay, let's go to, I'm going to use 4 hours candlestick now. Look at this candle. Okay, there was a kind of see an area of interest here. I marked an important area of interest here. So we can mark it as a zone. We can pull it up here. Anytime it comes here, but before we do anything, we must wait for the market to make what we call a break of structure. So here, the market was going up here. I just started from here. Let me shift it somewhere here. The market was up and it tried to come down. Then it moved up. But as you can bear me witness, it has not. We have here now is the swing high. So before we can talk of any buying activity, it must break a structure. But instead of waiting to break the structure on 4 hours, we are going to employ what we call the multiple time frame analysis. I like to use price action, though at times I employ moving averages to help out. There's a moving average I like so much. I like to use 9-period moving average, and I like the exponential one to target my entry on 15 minutes. So we are going to employ 4 hours and 15 minutes now. This is where people get a lot of issues, because you are supposed to time your entry very well so that your stop loss will be very, very small, but your take profit will be huge. That's what we call risk reward ratio. I normally trade, if I'm making a trade, if it is not up to 3 times, if my reward is not up to 3 times what I'm going to risk, I will not do it. For example, now, if my stop loss is $30, I will be targeting like $90. That is how professionals trade. Okay, let me remove the moving average and concentrate on the, okay, this is on 4 hours now. This is an area of value here now. So we go down to 1 hour to check what is happening. Having drawn our demand zone, which we can call the support zone. Demand means support. Let me go to 1 hour. Okay, these are the areas on 1 hour. Look at the areas on 1 hour here. Let me zoom in. Okay, these are the areas on 1 hour. So what are we going to do? We are trying to check if there will be a kind of break of structure before we can do anything. Then, having seen this 1 hour, I can still go down to 15 minutes. Good. Having gone to 15 minutes here, I will now trade if there's a good break of structure here. Let's check that break of structure. Look at this. This market under 15 minutes is down here. Hope you can see it now. Very, very down. Okay. Then it tried to move up. But we have the swing. The next swing high is here. Okay, we can bring it. Yes, that is somewhere here. So it moved up, came down. Now, the market didn't make lower low again. Rather, it is making lower high. And when a market is making lower high, we say that a break of structure is imminent. This is the swing low here. Then it moved up here, swing high. Then when the market broke, it made a kind of swing high here. It has broken this recent high. So we are now waiting for an opportunity to trade. Then there's a pullback here. Immediately we see this pullback here, we now wait again. Let this recent high be broken. Then there was a break of the recent high now. So from this time around, we look for opportunity to buy. You will no longer sell again. So let us check where we can buy. Here now we can employ our moving average. 9-period moving average. I'm going to zoom in. Now, there's a kind of, this is the first break. Let me mark it here. Then it came down here. Let me check if my volume agrees. Now, this is a low volume. We wait. Okay. Look at this. This is an opportunity to enter this trade. This is where we are going to buy. We buy here, which is it's close as 1.0909. This is our entry point. Then there are two ways of putting your stop loss. Some people will like to give enough room for their trade. They will like to draw it up to this place. Then let us check how many. Here now the market, we enter the market at 1.09, okay, 1.9097, no, 099, okay. Then the stop loss is somewhere here, is up 1.0887. So 90, this 87, 909 minus 87 will be giving us about 17 plus 9 will give us about 28 pips. 28 pips, assuming if we are wrong. So since we get 28 pips, we should be targeting like 28 times 3, or at worst 28 times 2, which will be 56. So let's check if we can have it. We now put our take profit at least 56 pips here. Okay, 09 to here will give us 71 minus, okay, which is more than twice our risk. But we don't just do it blindly. We are going to check at least if there is a kind of swing high, or where the market has given us a signal where we are supposed to drop our take profit. So we can go back to our 1 hour chart to find out. This is our entry, remember. We go to 1 hour to check what is happening. Okay, where are we? Hold on, I'm trying to get the exact place we did our analysis. Okay, oh, it's like okay, good, look at it here. Now if you check, let me remove this moving average so that we can see it clearly. If we check now, we have 2 swing highs. Look at here. Then another important place is here. So these are the 2 places we can now target our take profit. And as you can see, immediately the market got here, made a kind of first breakout. What do you mean by first breakout? Look at it, broke this area convincingly, but the next bar tried to move up, then formed what we called a doji. What do you mean by a doji? A doji is a candlestick pattern in which the candle closes exactly the same place where it opened. It formed a thing like a kind of cross. This is indecision. Some people trade without having a kind of stop loss, take profit. They only put stop loss. One of the signs they will need to exit the market is this kind of doji. Look at this doji here. And what happened again? There is a kind of we have a bearish engulfing candlestick pattern. So once you see this, assuming you are not out already, is an opportunity to exit the market. Okay, let me come back to our 15 minutes where we had our entry. There's something important I want to analyze here again. Okay, this is the exact place we entered. Some people that are very aggressive, they use tight stop loss. You can have your stop loss below the recent kind of look at, this is the most recent bearish candle, this most recent low. So some can have their stop loss here. This is a very tight one. So here you'll be only risking on about 9 pips. So if you risk about 9 pips to make about 60 pips or 50 pips, it's more than 5 times your risk, which is very, very okay. Then there's another way to trade this. We are going to have a kind of 2 windows open on the same currency pair. I'm going to remove this. I want to remove this. Then I want to add another Euro USD. Okay. Then I can go to good. I will come to my Windows overlapping ties. I have them here now. I'm going back to the exact place we had our first analysis. Good. I want to mark it very well. This is where we had it. By the time we were marking our analysis, this is where we have it. Then, as you can see, we have another one here. Okay, that's around 27th June. We want to do the same thing here. Around 27th June. Let's go to 15 minutes. Track that same area. Okay. Tracking around 20. Okay. It's still somewhere here. Okay. Let me check. Okay, this is 27th June. Yes. Okay, this is July. I'm looking for 27th June. Oh, this one is broken. This is 27 June. Okay, let me go to 1 hour on that 27 June. Good. I've gotten it. Okay, this is the almost the same area we entered the trade. Yes, this is almost the same area. So in this situation now, I want to okay, so let's do something like this now. As you can see, here I will choose here to be my, okay, here can be my 15 minutes, here can be my 1 hour, or even 4 hours. Good. Okay, let me use another example so that it can. Good. We check from here, draw our zone from here. Then we come back here to under 4 hours. We also draw the same zone. Look at the same area. Good. We now use this. If here is 4 hours, we can use here as, okay, says for you can use here as 15 minutes. Okay. Under 15 minutes. Good. Look at it. Now in this scenario now, this same place now, look at it here. Okay. Exactly. So this is exactly what we have. Since we have something like this here, let me make it clearer to you. This is that area now. So let's mark them one after the other. This area on 4 hours. Good. Let also mark here on 4 hours. Sorry. We mark here. We also mark here. So we go back to here to, this one is not inclusive. We go back here to 15 minutes. then we try to track it under 15 minutes. Okay, look at it. This is the first one. Look at the same area here. Here you can see the same area here, where we have this doji. Look at what we have here. Is all these candles, because 15 minutes 4 hours we give how many 15 minutes candlestick? Okay, 4 times 4, about 16, because 4 candles will be 1 hour, which is 8 candles will be 2 hours. 16 good candlestick. So if we count from here now, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16. So here now is what we are having here. Can you see it here? So in this situation, if you are trading this market like this, that's why it is good for every beginner to start with only one currency pair, so that you can put all your concentration there. By the time you master one currency pair, you can now talk about doing 2 or 3 or more, you know. Look at it here now. This is the exact place here. Here, this candle, look at the same candlestick here, and as you can see, this opportunity to go down. Let me get my volume indicator. Good. And you'll bear me witness this indicator. Look at this one. It was weakening. Look at this one until we have this. It's confirmed it, because the law of volume analysis says that for every, it says for every action, for example, a kind of big selling pressure or bullish pressure needs to replicate in big volume. Just in other words, when there is a bearish activity that is significant, the volume should also be significant. So here now, having combined 4 hours and 15 minutes, we have been able to identify a good place to enter our trade. Look at it here. Okay, look at it here. So if we had entered here, here is 1.0918. Our stop loss will be the highest candle, which is this one. So let me draw something. This is my stop loss above here, and my entry is here. What happened? It was so huge. So let me maximize this and check the next area where we are supposed to. Okay, in this situation, if we want to use a take profit, we have to target our profit here. Some of those swing lows. Okay, this is where we target our take profit. Now our stop loss is how many? We have how many pips? It's close 1.0918. Then our stop loss will be here 1.0930. 30 minus 18 is about 12 pips. So our stop loss is maybe, let's say, 13 pips. If you are trading with let's say 0.1, this is about $13 loss if it goes against you. Then if you add up the spread or commission, about $14. You are risking about $14. So let's check the swing low here. The next swing low, okay, since we are trading with 15 minutes, we now go to 1 hour to check where the next swing is. Okay, based on our 1 hour, the next swing low is somewhere here. Good. So we are risking $13, for example, and we are targeting here is 1.0856. So we now do plus or minus. This is our entry. We entered 1.0918. Then here is okay 56. 90 minus 56 will give us 44. 44 plus the other 18 remaining. 44 plus 18. Okay, let's use our calculator. 44 plus 18. 44 plus 18. So we are targeting $62, whereas we are risking 13 or 14. Okay, $13. It is very huge. If we check, let us divide this 62 by 32. Okay, sorry, we have 62. It gives us 62. 62 divided by 13. Let's see what it will give. 4.7. So we are having, our reward is roughly 5 times our risk. So this single trade alone will give huge amount. If it is somebody that is trading with 0.2, that each movement gives you $2. This $60 will now be around $120. Then your risk will be 24. But assuming you are trading without any take profit, this is where you would have made the market silly. Look at it here. So all we need to do was, we now allow the market to move. We use what we called, there's something we call this Hekenashi. Hekenashi is a kind of candlestick that helps us. It helps us to ride the trend. It is a trending bar. So if we are using this Hekenashi, it will now allow us to be in this trade. That's why I combine it. So as you can see, our exit will be when we see this huge bullish candle. All these candles are mainly red, which is bearish. This one that wanted to be blue has a combination of red and it is very small. So it would have helped us to ride the trend very well until we now see something like this. And as soon as we see it, we exit here. This is where we are supposed to exit. So let's go back to normal candle. So this is here, which is 1.051. So our real profit would have been, our entry was 1.0918. Then okay, let's calculate it. 1.0918 minus, this is where that huge one formed, 1.0852. Okay, minus 1.0852. So which is 66 pips as against 13. So if it is somebody that has a good capital, maybe trading with one full lot, this 66 can be $660. Because if you are trading with one standard lot, one movement will give you $10. But if you are trading with 0.1, one movement will give you $1. So any question so far? I want people to ask questions. Any questions so far? You can ask your question here. Okay. Okay, somebody asked a question, Joseph Okafor. Sorry, I'm just seeing it now. How many lot size is good for beginners? Okay. That's a good question. I'm going to answer it. For a beginner, the lot size that is okay for you depends on your capital. For example, if you have a capital of 1,000, okay, $500 per se, I think if I'm trading with $500, I can even trade with 0.1. But for a beginner, make sure that your lot size, if you are assuming you are trading Euro USD, you can you can trade with 0.03. 0.03 means that one movement will give you 3 cents. So that by the time you get about 50 movements will be $15. Do you understand me? Then when you are trading, and your stop loss should not be more than like 20 pips, which should be around $6 loss. Then assume you are trading to lose $6 loss, because it is advisable not to lose more than 1% of your account or 2%. But for me, at times I risk up to 5%. But for a beginner, assume you are risking for a start 1% of your account. So check what is 1% of. Let us do calculation. 1% of 500. Okay, 1% of $500 will give us what? Let's say 1 divided by 100. Okay, will give us what? Times $500, for example. Okay, 5. So in that case, you can risk 2%, which is $10. So whatever you are doing, assuming you want to trade with 0.05, okay, if you are risking 2% of your account, you can trade with 0.05. That 0.05 means that you are risking only that every trade, don't allow your losses to be more than 20 pips. So by so doing, you can trade with 0.05 for $500. But if you have like $100, which is you are supposed to trade only 0.01. So that is it. But if you have like $1,000, you can trade 0.1. If you have $10,000, you can increase it to 1 full lot size. Any other question? Sorry, let me respond to somebody. Hope I've answered the question. Okay, let's continue. We are done on that now. So the next thing we've talked about the support and resistance. Okay, let's take this one. Okay, the first one we did was a kind of buying trade. This is a selling trade. Let's take one more example. Okay. It is always good to do one's analysis on higher time frames. Higher time frames are very, very important. Okay. Now we are on dailies now. The market just opened. We are going to analyze, look at where, okay, let me look at, we can now mark here. Having marked here now, we can go to 4 hours. So here now, we are not supposed to sell because here is a very good demand zone, which we call them support zone. Look at it here. Before we can sell, unless the market moves down and has what we call them a retest, we can now enter on a pullback. You know, so I will be watching here to see what happens. Let me go to 15 minutes. On 15 minutes, look at what is happening already. The movement is stalling. So have your eyes here. It may be an opportunity to make a good trade. You can even come down to 5 minutes. So if this market can move up and cross here, first of all, then if it crosses here and pulls back again here, we can now enter our trade to buy. Then before we sell, we must allow the market to break down convincingly and make a kind of pullback, which we call a retest, before we can enter. Another issue I wanted to talk about is trend line. What is a trend line? A trend line is a dynamic way of following the trend. For example, now look at this. Okay, let me go to, it's almost to use higher time frame like dailies, 4 hours or 1 hour, to check our long time trend line. Okay, good. I've seen one already. This is on dailies. Look at what happened. This market moved up from here. Okay. When you want to draw a trend line, it must touch at least 2 important candle tail or shadows. Look at this now. This market was going up. It touched, this is the first touch, second touch. So all we'll be looking for here will be an opportunity to only buy until it crosses here. Let's go back to 4 hours to check exactly. Okay, sorry. These are our dailies. Let's go to 4 hours. Look at it on 4 hours. Let's even go down to 1 hour to check if we can get it. Okay, it's like 4 hours. Okay, our candle may not refresh to that area, so we can now use 4 hours instead. Look at it here. Let's zoom out. So on these 4 hours now, we will continue buying this market until the trend line is broken. Look at it here. It moved up, came back, made a higher high. This is higher low because the low here is less than the low here, which is a bullish trend. It moved up again. This high now is higher than this one. We call it higher high. It also moved up and that higher high. Then from here it stalled. As you can see, when a market fails to make a higher high, let's come down. Let's come down from where this market started. Look at it here. It started here, moved up. Here it broke. Look at the recent high. It broke it, made a low. This low now is not lower than the recent low, which is lower high. It moved. This is what we call a market structure. It moved up again. This is another high. Okay, we can use this one to mark them. Look at here. This is high of this. The first high initially was here, and it broke it. It broke it here, came down here as low, moved here as another high. Look at the low now. The low here now is higher than this low. So it moved up again. Try to move up, but it could not. Try to come down, it could not cross this low, which is it is still an uptrend until it broke. It broke up. This is what we call market structure. This is high. It came down here, made another high here. So from here now, look at the low. Once the market was here, it fell to make a higher high again. Look at what happened. Okay. Then we must use our trend line. Look at our trend line. Since it fell to make a higher high, we now check whether it will break. Look at the recent low. Okay, this is another high, low. If you don't know how to do it, you can use an indicator called zigzag indicator. Zigzag will look at it. High, low, high. I will pick this one as low, high, low, and this low is higher than this one. Another high here. Have you seen it? Low. Then this low now could not surpass here. It made another low here. Then until, look at another low. This low now, this time around, is lower than this. So the market is making a lower low, which is a change of market structure. But remember, we have a long-term trend line. Until it breaks this trend line convincingly, that is when we know that the downtrend is over. But instead of breaking it, it came right straight to the trend line. Look at what happened. When it came there, the market was stalling until we see a bullish movement. Very bullish candle. So here is our opportunity to make money again. We enter here, put our stop loss here, and the market this time around broke the recent high. It continued. High, low, small low, lower low. This is lower high, high. This high is higher than this one. It break again. Let's check if it is lower than this one. No, it is still an uptrend. It made another high up here, and after this high here now, look at this recent low, and once it broke this low, it is another turnaround. Remember, we are still, our trend line is still intact. Okay, the trend line is still intact. Look at the trend line now. They try to break the trend line, having made a lower low. It has broken this recent low. So the market structure has now changed. But it's not yet time to sell. We wait. It move up again. it made a high. This high now is a higher low. The recent low now is lower than the most recent low, so it has made a lower low. It tried to move up again, but it rejected. So from here now, we now look for an opportunity to sell. Look at this huge doji. Then we now see a bearish engulfing. So here is where we enter our trade. If we enter our trade here, our stop loss will be high of this. Then look at it continue going down. So until again, when the market fell to make lower low here, look at it here. This is another turn around. It continue moving up again. So that's the market phase. It now made a higher high here, higher high, higher low. Okay, this high now is not higher than this. We now wait, but this low is lower than this, which is the bullish or the uptrend is still intact. Higher high, higher low, higher high, higher low. Okay, it couldn't make a higher high here, but it made a little higher high here. The low here, it made a lower high, then came back and retest here. It couldn't make a higher high, and that opportunity to sell. Look at another bearish engulfing. So this is how you make money. You can trade on 4 hours and make your money, without being on the chart always. So this is all we need to know about market structure. The next thing we are supposed to do after market structure, I think, let me get it, the next one. After market structure, we need to look at okay, the next one is, sorry, okay, I'm trying to get it. The next one is okay, we've talked about trend line. So we need to talk about Fibonacci, but this will be for another day. From your comments and your questions, we now determine whether you understand the ones we have done. So if you didn't get it very well, ask your questions so that I can now clarify you more. So I'm going to call it a day today. Then I'll be doing a live streaming every day now, at least every night. I will try. If I don't do live streaming, I will upload a video so that whatever you need, you will get it here. Support me by commenting, subscribe to the channel if you find it useful. Then I welcome your criticism. Tell me ways I can improve, because I'm a learner in all this live streaming, because I've not been doing it before. So the channel is new, but I'm eager and ready to improve. So tell me where we can improve, so for the content to be better for you viewers. As you do so, and God bless you. Thank you.